Greencoat Renewables is seeing red on the charts, but is that telling the full story? You're watching Insightful Value, where we don't just track stock prices, we break down what's behind them. If you're here looking for the next undervalued opportunity, or just trying to make sense of what's dragging this stock lower, stick around. This is an informational and educational review, not financial advice. Greencoat Renewables, based in Ireland and listed on the Euronext Dublin and London Stock Exchange, is a pure-play renewables investment company. It focuses on wind and solar energy assets across Europe, aiming to provide long-term, stable dividends from renewable infrastructure. The company has steadily grown its portfolio, with wind farms in Ireland, France, Finland, and beyond, totaling over 1 GW in capacity. And yet, despite solid operational output, the stock price has been in a steady downtrend. So, what's going on here? For starters, Greencoat's business model is built on acquiring and operating renewable energy assets with long-term contracts. That sounds rock solid, but higher interest rates have thrown a wrench into the renewable infrastructure space. These companies are heavily capital intensive, and as the cost of debt rises, their valuations tend to compress. Additionally, renewable energy pricing has been volatile in parts of Europe, pressuring margins despite strong generation numbers. However, from a value investor's lens, the picture gets interesting. Greencoat trades at a significant discount to its net asset value. That could mean the market is overly pessimistic, pricing in a prolonged period of pressure without giving credit for asset quality or income stability. The dividend yield has become increasingly attractive, hovering around 7%, and is covered by operational cash flow. The company has a track record of growing its dividend consistently since inception, which is a big green flag for income investors. On the development side, Greencoat continues to deploy capital. Recent acquisitions include wind assets in Sweden and solar farms in Spain, signaling geographic and energy diversification. They've also maintained low leverage relative to peers, offering some cushion against rising rates. Still, the key risk here is sentiment. Investors have cooled on renewables in the short term, even if the long-term trend is clearly toward clean energy. That disconnect between fundamentals and market pricing is exactly the kind of thing we look for at Insightful Value. We provide in-depth analysis of overlooked or undervalued companies, stripping away the noise and helping you focus on what actually matters. Whether you're a pro or just starting out, we break down complex financials into real, digestible insights that help you make smarter moves. If you want more deep dive reviews like this one, including our full report on Greencoat Renewables, check out InsightfulValue.com. You'll find data-driven takes, no fluff, no hype. Thanks for watching. If this helped, hit that subscribe button and drop by InsightfulValue.com for more. See you in the next one.